All right, guys, how's it going? Sam here from TradeDevils.com and TradeDevils-indicators.com. Today we are looking at the latest enhancements to our graphical order flow package. Now, this is the complete package put together with the new indicators and tools that we've added to it. Of course, we're going to go through each of these components individually, but what I thought I would do here today is break these down individually so we can understand what we're trying to do by adding these, and then perhaps along the way a bit of a training in terms of how you can use this with regards to application and trading decisions and entry, exit, etc. So the new features that are built in now are the McGinley lines here that you see on the chart, the Devil's Volume, and the Trader's Dynamic Index for momentum. So rather than try and work with this all put together, I thought it would be more beneficial to pick it apart one component at a time. So what I thought I would do here is just start at the most basic level. So let me bring down another chart here. Still looking at the S&P. Now I should note here, as I always do, I record these on the weekend. So Saturday morning, the 12th of February. So we're just going to look at the last couple of days of data, as I always do. I just use what's current, right? There's never any need to cherry pick, so I never do it. I have on the chart here, I've got our toolbar up on top because I will grab things from that. I've got our initial balance, right, which I always put on the chart just to kind of frame the day, gives us a beginning, middle, and an end. Oh, and then, so you'll see here's some lines here that are tied to the initial balance here. And then on the chart here, what I want us to focus on, I have just as simple as it can be, just a 20 and a 50 period EMA. Now, you know, one of the it's both frustrating as well as it's the beauty and the curse perhaps of technical analysis, in that after the fact trading looks so easy. It looks so incredibly easy. Oh, here we're just using Friday. Now Friday, I mean, this entire week was really marked by extreme volatility. I mean, this is really unusually high volatility, particularly if you're a day trader working off of 1 minute charts or lower time frame or tick charts, whatever it may be. This is extremely high volatility. So if nothing else, these kind of extreme volatility climates, I think they're a great advertisement for the micros when the volatility is this high. I would suggest micros in this climate of volatility for it counts to 20K and below. I mean, it's just very high volatility. But I circle back to where I started here. With that volatility, when the market is trending, oh God, it looks so easy. Wish that it were so, right? So if we just look at a section like this, where as the 20 separates from the 50, right? I mean, there's a beautiful series right here, a nice little rotation in the middle of it. I mean, just couldn't be any easier, right? Now, of course, in hindsight, right, we look and we say, oh, well, okay, well, there's the swing, there's the retrace. You got right in the sweet spot, right to the 20, in between the 20 and the 50, often just a great spot for trend continuation as the market retraces and then continues. We get back below the 20, then back to the 50. Now here we start to threatening a trend change, but as we know how the day unfolded, right, again, then we got some news here that plunged the market down. But what I want you to focus on is just how frustratingly simple it appears. So again, here I'm back on Friday. Now Friday, you're coming in after all the volatility on Thursday per the CPI and Fed speak, etc. Now if we look here, now just the craziness of the open, given the background of volatility that we're in. Personally, well, I won't trade for the first 30 minutes, right? But some people like to do it. But I think this is, you have so much volatility naturally in the first 15 minutes. Now add in the background of volatility and the fear and the greed that's permeating the market, and you can just see the chop that we get here. But eventually, it starts to show its hand. So if we were looking at this just from a price action perspective, well, we're seeing a swing, a retrace creates a lower high, get a lower low, now a retrace, now yet again a lower high. Now in between here we start some chop. So we're not just going lower low, lower high, lower low, lower high. We get a little chop here. But even if I were to just draw a trend line on this, right, you start to see the direction here, and it's kind of matched below, right? And again, I know, always easy in hindsight, but you can see this starting to give you a sense of the upswings are not, we're not getting new highs, and all the downswings we're getting new lows, right? Or maybe not, every little swing, but the general trend. Now here, if anyone who's applied moving averages to any chart knows that when they're on top of each other, dangerous area to trade. Dangerous. You don't really have any advantage because the trend is not established here. We can't make any sense, right? You have absolutely no edge to be trading in here. So terrible place to be trying to trade. And this is the problem so many of us deal with here. When you're right here, you're trying to anticipate something. So you're thinking, oh, hey, the 20 is above the 50, maybe we're going to start to go here. Right? That's not where you want to try and enter. And I'd be the first to tell you that a moving average cross is, well, there are perhaps better ways to approach using moving averages within your day trading than to try and work through a cross. Now that said, if you look at Friday, right? I mean, I'm going to contradict myself, but this cross right here where the 20 went below the 50 at let's just round it, say it's 10 of 11. That's the last time it was above for the rest of the day. I guess we had the final cross here was in the last 5 minutes of the day when we start to get the volatility that you get at the end of the day. But throughout the entire, this move here, the retracement, the struggle to get back into the initial balance, it's just below the whole way. So this is what I was saying. This is what makes trading so difficult. It looks like, right? This is what happens to in your mind's eye, right? You say, well, of course, right? Oh, we broke the structure here. Yeah, I would probably just sell it there. And, oh, look what I got there. And then this is a natural thing we do. Right? You say, oh, hey man, there's $2,800 there. Right, I'll be done for the day. Right? Trading is so easy. Wish it were that easy. But that said, the reason I wanted to put this on the screen here before we got into the full suite of tools here is just to remind you, just for a second, that it can be that simple. Right? We tend to complicate because we're trying to outsmart the market. Right? I mean, it's natural tendency. Right? I've been doing this for a long time, and I have to build tools. I mean, so much of what we're doing with TradeDevils indicators are tools built to protect against my own weaknesses as a trader. So you've often heard me describe some of our indicators as dumbass filters, like, hey, dumbass, are you sure you want to be longing right here? These are issues, right, that I try and relate to you because I know what you're going through, right? Because I go through the same thing. So when we design these tools, I think it can be beneficial to simplify just for a second and just realize that if you're struggling in this volatility, most likely these are self-inflicted wounds. So, I mean, you look at something like this here. We've got a swing. We've come a retrace. Now, we're right in between the bands, or the moving averages, I should say. Now, do you know here? Do you know, right? I mean, when you're right here, do you know what's coming? Well, just if you're right there and all of a sudden we've got this little push higher. So here, let's see here. I guess we're going to not be able to do that quite the way I wanted to, but let's just look at this right here, right? So we've got a little base of support that's been established here. So here's a little swing. Now we go up. Now right here, it would be easy to talk yourself into thinking, oh, okay, I understand what happened here. I've got a little double bottom. Now here's the squirt. When you look at that, and then again, this is tempting to say, well, hey man, there was $437 there. So yeah, again, we do this in our mind's eye. Yeah, I would have probably taken that long here after that double bottom, right here. Then we break this, right? So, well, slow down for a second. Look at that price structure. Are you sure that's a trade that you want? Now, maybe you're a very sophisticated trader. Typically, people that are here are looking for help. So, in the context of explaining how these indicators work, I try and teach a little bit along the way. So let's just look at that for a second. Now, first thing, right? If you were thinking about longing it here, where's the 20 in relation to the 50? Does that make sense? I mean, maybe as a scalp, right? You might look at that and say, okay, well, I'm going to break that little structure here because I've had a double bottom here, so I'm going to take that. Okay, maybe there's a scalp there. But really, as a consistent habit of trade selection, In a series like this where all of a sudden I've got a swing, now granted I don't get a lower low here, but I get a swing, I get a lower high. Now again, draw your eye to where the 20 and the 50 are. Now here we're right on top of each other. Do I want to be making a trade here? Probably not. Well, now here, right, and again, this is typical, right? We do this in our mind's eye. Oh yeah, well I would have shorted that. Okay, maybe you did. I'm going to guess probably not, because I mean, here's what I'd have been looking at. I've been saying, well, hey man, I got a base down here. I'm fighting to get back into. I mean, I remember this, right? I was communicating to our traders in our Discord channel here. They're making a push to try and get back into the initial balance, because whales, hedge funds, institutions, call them what you will, the initial balance is a great reference for whether we're going to have a ranging day or a trending day here. So the bulls are trying to get the market back inside the initial balance. They can't do it, right? They try again here. Right, that's always what they're trying to do, is get back into the initial balance here, right? But they can't do it. So it's 2 tries. Now the power here comes not so much in that you would have known to short it here. That's usually not the trade that we're after. The trade that we want is the retrace after it fails. So here's the swing down. Look at the separation between the 20 and the 50. Now here's the kickback. Okay, we're coming right back into all of this structure. Do you want that trade? Well, okay, well we're on the other side of the 50, so maybe you're unsure. It looks like, oh, they're going to go again. This time they're going to get into the initial balance. They fail again. So I've got a series now. Now I've got a lower high, lower low. Pardon me. I've got a high here. I get a low. I get a lower high. Now I've got a lower low, right? Which is confirming this lower high. Now here's the retrace. Now you might be tempted, thinking, oh wait, oh shit, here we go. They're gonna push it back up here. We're gonna head back towards the open, back towards VWAP. You don't get it. Here's the trade, right? We come down. Right, this holds. It's the retrace now. Now, of course, right, you wouldn't have known this was coming, right? Then the Russian news hits, right? That aside, this is a great example of where we want to enter the market, because we can see this evolution here. We can see the price action here taking us down. Okay, now again, where's the 20 relative to the 50? Are you sure you want to be a buyer here? Well, you're right into the, oh, what is that, pre-market mid, I think. Now, maybe you say, oh, that's a terrible example, because it exaggerates the potential returns on the trade, because you wouldn't have known, right? You wouldn't have known they were going to, that statement was going to come out and we're going to get into geopolitical issues. You wouldn't have known, right? So while that's a good example, what comes off of it here is not typical. Okay, let's, oh, shit, we get through the rest of the day. Well, here, as we finish the rest of the day, here now we're getting into 2 o'clock, 3 o'clock. You see the same thing happening here. It continues here. Now, first note, where's the 20 relative to the 50? But we're getting these pushes that are on the other side of the 50. Now we're back down, but we're breaking the 50. Now the 50 is not necessarily something to anticipate a to the tick retracement. It tends to be a zone. It's commonly used. Well, for years, it's been used amongst market makers in FX. Now, of course, we don't have traditional market makers, but the exchanges provide liquidity. But it has long served as a kind of a reference for where pools of liquidity could be found from market makers. But it's also just traders typically will use it as kind of a boundary for trend. And you see it while we get through it here, the consolidation here. Now this is 220 after this big move that we had here. But this consolidation here, perhaps you're unsure here. We've had the big retracement here, but again, it's lower lows, lower lows. Now all of a sudden, is this enough to be a change of character? Well, how would you know? I mean, that's what you'd be anticipating. Oh, if we're going to start to retrace here, maybe we're going to come back down, and now we're going to start to pop higher, maybe go back towards some of that structure. But it's so quickly rejected, and then yet again, 20 stays below. Now, you can make a case. Now, I know this is really nuanced here, but we get a failure swing here. We can't get a new high here. So perhaps a bit of a tell, right? But let's assume you didn't get that one. Now we're coming back again. Now, you'll note here that what's happening here is we're coming right back into this prior consolidation. Would you have known to sell it here? Again, you're on the other side of the 50. Maybe you're a little uncomfortable there, right? I know, again, I'm trying to do this being mindful of how easy this is in hindsight. But now we're back again. We're back again here, and we can't get a new high. Now we start to roll over here, the break of the structure, right? So there's the pivot that would break the structure, that would confirm this as the lower high, right? Now we go down. Now we're back again. Now see, what has made this week so difficult is that wick there, right? This is again kind of the wick that we get there. That's a $400 wick, right? So if you're oh, here, let's even use this one here. So if you took this after the doji, what we get there's another $400 wick. So if you took that trade, and this is kind of what I was talking about, why micros are particularly good in this kind of volatility, right? So if you took it here, oh, here, let's move this off. Right, so you took it here, right, thinking, oh, there's the swing, lower high, now I'm going to go. Now, can you sit through? Right? Most day traders are not going to have a $400 stop on it wouldn't matter. The size wouldn't matter whether it's 1 lot or 20 lot. You're likely not going to have a $400 stop. Right? Maybe you do, right? I mean, again, right? Risk is a relative term. Maybe you do, but for most day traders here, that's a bit of a problem. Right, that's too big a swing. So after you got the initial start here, a $400 kickback, I'm going to assume most of you are going to be out on that. You're either going to get stopped out, or you're just going to take it out. Let's see if we've got a 2 lot. Oh, would have an $800 drawdown. Okay, again, it's relative term. Right now, if you're in micros, different story. Let's keep going. Here we get it again, right? So now I've got a series here. I get another lower high. Here's the lower low, right? So I know this is getting kind of granular down here, but I've got a destination in mind. Here we come back. Now here's that. Now I'm kicking back again, right? Again. So if you were here, so if you took this little break here, well, there's 475. But of course you're going to know just looking at that the kickback here, just that bar alone, is another $475. Right? These are big retracements, right? The volatility is so high, and it's deceptive to your eye. That looks like, oh, what do we got there? Maybe $75 kickback. That's $475. Full size contracts, right? You took a 2 lot there. Whoa, you're very, if your pivot is up here or up here, okay, maybe you dodge that, but you're certainly uncomfortable there. Maybe you're not, but I would be, right? If I've got almost a $900 drawdown on a retrace off of a short that I took, I'm uncomfortable. Now, what we're trying to get to here is how to help identify the entry locations here, because each of these look like, oh, well, that's good. Oh, but wait a minute, I got a $900 kickback. Oh, well, that's good one here. So you deduce from this, and again, this is back to our mind's eye. Oh, well, I would just take the profit here before that starts back. Oh, and I would just take that profit before that starts back. Oh, and I would just sell it down here. Now look at that kickback. Right? It just, again, right? I mean, there's almost a $1,600 retrace. Does it change the character of the market? Lower high, lower low, lower high. Now here, maybe, right? Maybe something's changed here, but I get yet another lower high. Double bottom, right? It's the lower highs that are driving. And then once again, note the 20 and the 50, right? At no point until we get right here, right? Now here we're in the last 5 minutes of the day, right? As we talked, that's the last time it crosses. Right now I got the 20 above, but it's above for this final little blast off here before we go into the close, right? Here's the close right here. So this final little volatility, right, so every day, right, as they settle up, that's not a place you're going to be trading, right? So the fact that we get the close there is not terribly surprising. But I guess, I'm long-winded here on trying to get you to focus on simplifying. Where's the 20? Where's the 50? I know it's annoying, right? I'm just going to go through the overnight here. Same thing, because there's great examples here. When we see this is what we dream about, right? If you're trading with this kind of as a template for where's trend, it's when price gets above the 20, right? And we start to separate here. Look at the distance here. And then you'll note there's a very natural phenomenon. Price will get away from in this case, it's a 20 and a 50. It will get away from the 20, and then eventually it'll come back to it. Now, once we get, you have zones here where we can be in the in-between as we are here, but it will eventually tend to work its way back towards the 50, sort of as a baseline. Now, so we get away from the 20 and the 50, we come back to it. Now we get away. Now here, this is where it's just, you know, I mean, when you get these are just what you're hoping for. We come back to the 20, come back to the 20, come back to the 20. Now, all of a sudden, here's where we get a change. All right, now we're going into it, but I just want to kind of draw your eye to that in terms of the expectation, because rarely, right, if we continue to push higher here, the 20 is just going to get drawn closer and closer to it, as is the 50. So you will find it's very consistent that the market is going to come back to them. Right, that's why traders have used these for years. Right, here's another pre-market example. We get away from it. Now we're back in the pocket here. A little spike of volatility just to probably stop run. Now we get away again. Now back to the 50, to the tick. All of a sudden, change of character here. Here's the lower high, and it starts to change. These are the runs that when you see these, you want to trade these until you get the change, right? So here, swing in between, right on it. These are just unreal, right here. And here's where it starts to change. Now they're on top of each other. Now this is all pre-market, but if you're trading in Europe or somewhere other than the U.S. or your time for whatever reason, I mean, look at these moves. Swing, retrace, swing, right to the 20, right to the 20. Now we're in the chop here, one last, and then you get the trend change, right? Now it goes the other direction, now back the other direction, right? So you can't, we're not advocating any sort of a cross, but it's a good reference for where's the strength, where's the strength of trend, because that's all we do all day long is just kind of work through these ups and downs, and this is a great visual reference. Now I'm back to Thursday. I mean, how? Right, here they're right on top of each other, no edge here. Other than, I had the initial move here. Look at the separation. Here, all of a sudden, what changes here? Lower high. Now, now I'm drilling right through the 50. Now I'm back to the 50. Another lower high. Swing, lower high. Swing, lower high. Right? Note where those are happening. Right? If you, I wasn't sure. 450 right there. Right, I mean, it gave you all of you. Oh, I'm not sure. It wasn't. Oh, it was on top of each other. Well, I don't know. Wasn't sure. Like at this one, that should be fairly straightforward to take that one. A little trickier here, right? Do you know? Right? You don't know. Okay, I got to swing. Okay, I'm retraced back to the 50. Back to the 50. Here's a little pop. What is it you're looking for here? If you're considering it's anything that would be a new trade, well, some sort of change of character. Higher high, higher low. Higher little baby. It's just sideways. Higher high, higher low. Higher high. All of a sudden, what we get it's a subtle, very well. Here, let's use this. It's very subtle. Right, little break. What's the next thing that happens? Lower high. What's the next thing? Now here they're crossing, right? But you wouldn't. Of course, you had no way of knowing that was coming. But right. So let's assume you don't get that, right? I mean, that I didn't get it. Nobody knows that's coming. Big just dump of size. That's not the trade, right? The cross. That's not what we're trying to teach you. That's not the trade you're after. This is the trade you're after. So look at the separation from the 20. We get away from it. Now we're coming back to it. We get right in that pocket between the two. Oh, you might again. Always want to be looking left, right? Coming back into that prior support becomes the resistance. Look at the wick rejections. All right, all of a sudden, lower high, lower low, lower high. That's very tradable right there. Oh, you didn't get that one? Oh, well, okay, we didn't quite get back to it, but we're just going sideways. Now we go down again. Now, eventually, we're going to go back towards the 50 as we do here. Now here, right, where they're right on top of each other, do you have any advantage here? Nope. Did it flip? Right, 20 stays below the 50. Back again, here's the initial balance, right? They're trying to get back in, can't do it. Do they flip? Nope. Lower high, lower high. Higher high. All of a sudden, something has changed here, but now we're getting into the end of that day, right? So you just see this over and over again. Okay, I think I probably did too much on that, but again, the amount of people that reach out to us that are struggling in the market, the first thing I say is, well, look at what they're doing and say, let's simplify it. Can we simplify it to get you just basically in tune to what? See, most people won't trade this because they think it's too simple. Too simple, right? I gotta be more sophisticated than that, right? I mean, here, just obvious. Do we want to trade that? That will kill more day traders than anything else in the market. They're trying to guess which way it's going. Oh, it's above. Oh, I haven't buy it. Oh, we break out above the initial balance, right? This is the stuff that absolutely destroys day trading accounts right there. But look, you didn't have to guess here. They're on top of each other, right? So what we're looking for is that nice spread. Here, great example. Swing, retrace, higher, low. Now, when I get on the other side of it, now, do I know that big rip is coming? Of course not. Do I have a frame of reference here? Yeah, there's a wick that gets through it. We're right back to it. Are you gonna buy that low? Probably not. But if we get here, there are opportunities everywhere. Same thing. Right now we got a little swing. Now I'm gonna retrace. I'm back to the 50. What did I get here? I got a higher high. I got a higher low. Higher high, higher low. Higher high, higher low. Double top, right? And caution, we hold the 20. All of a sudden, now, are you going to get that one? Probably not. But by the time we get here, right, maybe you're starting to recognize the change of character, right? Swing, lower high. Swing, lower high. Swing, lower high, back to the 50. Yeah, I know, easy in hindsight. Okay, let me move on to the next component here, because it's turning into more of a I didn't really intend this to be a moving average training, but I think that that's important that we get that foundation when we move over to the full implementation of the graphical order flow. Let's get back to Friday here. Okay, so with that said, let's add one piece at a time. So the first thing I'm going to add to this. I have it here. Okay, so I'm still working with the 20 and the 50, but I've just added the devil's volume here. Now we introduced this last weekend here, and I don't think we've made any changes to it. We're working on we will have a hotkey for here. I'll show you that in a second. But there's a couple of things that we want to draw your attention to. Perhaps you saw that video. If you didn't, here, let's just do a quick review. So there are only what do we got? 5 different types of bars in terms of volume bars and their denomination on the chart that we're looking for. We have the bright green, which means we have volume 200% higher than the last X number of bars. In this case, I have it set to 4. Right, 200% higher than the last 4 bars. I have 150% higher than the last 4 bars with a blue bar here. And then I have 150% of the last 4 bars volume with a pink bar here. And then 200% of the last 4 or X bars volume with a red candle. Red bar here, and that's reflected on the price action here, and that's a little harder to see because of the way that I've got the coloring done. But what I want to draw your eye to, and what we encourage you to be looking at throughout the course of the day, are these high volume bars, because these can be clues to us. So how do other traders use them, and how can we use them to our advantage? Well, from the most basic level, when we see these high volume bars, we know that there's a pool of liquidity there, right? More so, right? So if you're looking for liquidity, this would be the bar you'd be looking for it rather than 3 bars back, right? Just common sense, right? Just where is the liquidity pool that could be tapped into if you're a trader? So let's use a couple of different examples. So one way to consider this is that when we have this high volume here, well, let's use this one here. This is a good example. Okay, so let's use, where's my arrow? All right, so we're going to use this bar right here. So I have 150% of the volume of the last 4 bars, down bar, right? So we know sellers were more aggressive here because of that volume. Well, the first way to look at that is here. If sellers are aggressively entering here, it would not be unreasonable to anticipate that perhaps not all those orders were filled. So you might anticipate that the market would come back to that for those traders that didn't get their orders filled to now finish filling the sell side that they were after, right, in that bar. Right? We know the liquidity's there. It's a reasonable assumption that not everything they wanted got off there, right? Particularly if you had iceberg, or some size here they couldn't get filled. There's just, because it moved so fast, there may not have been enough buy side here to match it all. So we return to this looking for those sellers to finish completing the orders that they're after, and then look what comes off of it. Right, so that's one way to use it. The other is just not necessarily with any directional bias, on the assumption that it was sellers that were in here that are finishing up here. The other assumption is that it's a pool of liquidity. So for larger traders that are looking for areas to enter and exit the market without disrupting the market or the order flow, these areas can be useful to us, and we want to know where they are. We want to know where they are, right? So here I've got 150% of the volume in the last 4 bars, so I know I have a high volatility event here. Pardon me, a high volume event. Boy, I've got volume and volatility wrapped around my tongue today, right? So here's the high volume here, and I can see now. Just look at the candle, right? So this is an up close, right? I've got high volume here, but is that a buying type of candle that you want to see? I mean, what we're seeing here is wick rejection, right? So up again, and then if we look to the left, we see the same thing was happening here, right? This area here, there's no interest among buyers here, right? Despite the big effort to try and attract attention here, we roll down. Now, are you going to take that trade short? Well, maybe not, right? So would you have any advantage here looking at the two moving averages here? There's really no advantage here. The only you wouldn't really have any insight into a possible trade until you return to that area of volume where we have that pool of liquidity here, and you see. Well, let's do it this way. Let's use the highest close here. Right there. Okay, so here's the highest close here. I'm just drawing from the candle right across. Now, right, you can, here, let's pull this back. All right, you know it's there. So as we come back to it repeatedly here, where we have this high volume, the market is giving us little tells here. It can't close above it, right? Just as it couldn't close here, just as we had all this rejection here. So this is right, the market, the auction process in the market here is, can we attract any buyers here? Right, look down below, right? Well, okay, so these 3 candles here are reflected right here, these 3 volume bars. So we're seeing a little uptick in volume here. We get above, that's a 20-period average. Oh, yeah, I think it's 20 period. 20-period average. You can set it to whatever you want. I believe we have it set at 20 by default. So I'm getting a little extra volume here, but I'm getting the rejection in the same area. Is that a trade? Well, maybe not, right? Look at the moving averages. But this is an area I want to be aware of. So next time we come back to it, is there a trade there? Well, again, moving averages, you're still, I mean, you could really make a case here that all of this, we're just waffling. We can't get any attraction to the upside. Let's come back here. We can't, there's no thrust here. There's no attraction. Buyers aren't attracted up here, right? So what do you have to do? Mark prices down, right? So we get down low enough, now we get some buyers to come back in, but yet again, they're back into that same area here, and there's no interest amongst buyers. Now, in that process here, let's draw this over here, we've got high sell volume here. This has come into it. So now the market comes back to it here. Now, one thing you want to be mindful of is that we want to try and stay relative to the most recent price action here. So while this is worth noting here when we come back to it, with regards to trade execution, there is a little trade in here. Here's the high volume here. Here's where the pool of liquidity is. Now we come back on the assumption here that not all the sells orders that wanted to be filled could be filled, or whether it's just a pool of liquidity, then we get that little retrace. Now you say, "Oh, come on, man! What is that a trade you even want?" Well, how much is there? Let's say you took as we broke the doji, there's 287. Right, so that's just a little scalp. Right, you're coming right back to the open. So maybe not a trade you want, right? Maybe, right? So here, no, again, we're coming back into that same upper quadrant here. Here's the pre-market high. We can't, nothing's happening up here. There's no attraction here. So maybe you got this, maybe not. It sure did turn around quickly. So you see the same kind of thing, the same rejection is happening here. So we really have this range where we're getting rejected down here, we're getting rejected up here. The market is still deciding which way it wants to go. Note the 20 and the 50. right? So if you had any sort of a directional bias here, you might be starting to bias lower. And if you had any kind of directional bias here, if you're leaning towards the moving averages here, well, perhaps you've got an upside bias here. But all of this wick rejection here is market's talking to you. Anybody interested up here? Nope. Oh, how about anybody interested down here? Well, I got a little interest. How about down here? Oh, I got more interest. But once I get up here, less interest. Pool of liquidity. Well, okay, did they get it here? Well, here on this bar here, so I get this huge, here's a good example of the opposite of that. So I get a huge bar of liquidity here. This is sell volume here as the market, well, let's see, where are we? Yeah, so this is the first test of the IB. You got a little scalp out of it. Here's the break of the IB. Now, the IB is critically important throughout the course of the day. You have to pay attention to where that is. They're trying, this is the initial test of the IB here. I won't digress into that. We've talked about that many, many times. If you're not familiar with what's there, go watch the initial balance indicator. So we kick back here. Note where we kick back to, right into all of this liquidity. Now, where are the moving averages? Now, note we have separation between the moving averages now. I've got wick rejection here in this pool of liquidity at an area that I can't seem to break through. Can't seem to get through it. Look, again, it's easy to go eye blind to it. You get so focused down here, so focused out. Wait, where are the moving averages? Right, I'm right in the sweet spot. Like I can't, oh my God, do I really, is it going to come back there? Would I get a chance to sell it? Well, maybe I'll get some wick rejection up here that would give me a better clue. Oh, well, I wasn't sure. It's right by the moving average, or pardon me, right by the initial balance. I wasn't sure if I wanted to take that trade. Boy, they gave you plenty of chances. Here's the kickback. Here I am again. Look at the moving averages. I've got lower highs all the way down. Now here's the break. Right? Let's say you only took it to the pre-market mid. Right now, is it hard to take that trade? Well, you might be a little uncomfortable because you're down here by the day's low, right? But you got to be able to take that trade here because there's enough, right? There's enough, right? You could be very tight with the stop. Once we break, let's assume you're not going to get all of it. Let's just say you take it to the pre-market low. Well, there's 23 ticks, right? It's not a bad scalp. Right, if you had one or two there, take one off, and it has a little bit more legs on it here. But just even right there, one lot, two lot, not a bad little scalp. That would be a reasonable target, right? If you're over on the edge, you don't have anything to work with here. That's pre-market low. We know algos respond to everything they can. So is that an area where where you might anticipate a reaction? Well, I get a little kick. Doesn't last long. Okay, let's stay with us here because hopefully this is bringing some awareness into how you view the market here as it's moving here that maybe you didn't have before, right? And this is just giving us additional benefit. I don't even have the graphical order flow components on yet. Oof, long video. Okay, so here all of a sudden now, what starts to happen down here? All right, we had this nice run here. Now remember, as we were talking about before, look at the gap I have from the 21 or the 20. Nice fat gap. Look at the distance from the 20 and the 50 here. So nothing's inevitable, but it's most probable that the market's going to want to start working back towards both the 20 and the 50. In this case, we get one last little push to try and get back into the initial balance. Right? We were just looking at this on the other chart. We're trying to get back into the initial balance here. Can we get back? Then head towards VWAP, then get back into the range, and then reset the day, right? Perhaps this is the 1145, or it's very common, right, as Europe closes, that we get a trend change. Well, we get the start of it. Well, here, note, right, it starts higher high, higher low, higher high, higher low, higher high, right? So I've got the start of it. So if you were trading this, I mean, this is your very counter trend. Again, look at the moving averages. Right? Okay, but I can see within that I've got the start of a trend. So in the midst of that, I get a very high volume bar here. So I saw highest volume in the last 4 bars. I get this high volume bar. Well, if you were looking in there and you thought, okay, well, I want to be aware of that high volume because this tells me now that the market is really pushing here. They're going to try and get back into the IB. Well, where do we go? Right to the IB and get rejected. Back to the IB, rejected. Right? They're trying to get back in, right? This is like the door at the club, right? Can I get back into the party? No. Oh, there's a little tease. Well, look here. So you now remember, we don't necessarily know that they're incomplete orders here, but we can look here. This is certainly there's a push here. Look at the 3 bars here. There's a high volume happening here. So we've got bulls and bears fighting it out here, right? But we're in this very tight range. Again, if you have to give anyone the edge here, bulls or bears, well, number one, we're outside of the initial balance. Right, that's the IB low. Look at the moving averages. Who's got the advantage? Even though you've had this little counter trend swing here, we don't actually flip the moving averages. They just come back together right here before they start again. Again, now we're back. So the initial balance is creating all of the issue here. But let's go back to these bars. So here's a bar right here where we know there's buy volume here. So perhaps, right, it's liquidity. Perhaps not all the buys were triggered here. We don't know, right? We just make notation of the fact that I have a high volume bar here. So if I come right back to it, you know, do I want to be a buyer here? Well, I wouldn't. Again, look at the moving averages here, right? Do I want to buy that here? Well, maybe, right? Maybe there's a little push here. You got 3 bars here, but look at the volume down below. Here are the 3 bars. Okay, maybe as I get there, rejected. Now here's a big push, right? So you can see there was a push here to try and get back to it. Doesn't last long here. So again, we would do the same thing. I would draw your eye to this bar right here. If indeed this is orders that didn't get filled, right? So they're coming back here. Okay, we can fill those buys and now we can get going here. Well, doesn't happen. We just know that there's liquidity here. So what actually does happen? Again, this is nuanced here, but you have to look for this. We come back up to it here. We can't break to any new highs here. So what do I get is a lower high, lower low. Right, see it? So it's small, but if you were looking for a clue here, would that be enough? What would that? You might say, oh, okay, well, I wasn't sure. Well, now they're going to give you yet another shot at it. Well, here, look. So if you were thinking right here, oh, okay, there's sell volume here. So if those are orders that weren't that they didn't get all their fills, you might have been thinking, oh, I see what's happening here. We're coming back into the range here. Look, moving averages, the 21's below the 50. We're going to go down. Right? That's what you might have looked for. Oh, okay. Well, number one, here we are mighty tight here. I'd also be mindful of whether or not there was any algo play. There's not. We've already broken on this side. So, but what I do have the potential for here, which we'd have to be mindful of, I've got a potential right here. As it starts to go back towards the IB, what do I have? I've got a higher low. Do I confirm it as a higher low? How do I confirm that? Well, I can't confirm it until I get a higher high. Right? Otherwise, what is it? Right? It's just, it happens to be in this context here. I've got a higher low, but I can't confirm it in the direction of the swing structure of the market because I don't get a higher high to confirm it. So I just go right back to the IB. Right? They're trying here. They can't get in. So if this was sell and they were going to take it down here, you would have seen the market would have started to go back, right? They're just tapping that liquidity. We'd go down likely towards that pivot, right? But what I get the opposite here. I get a high volume bar pushing me out of it. Now I'm pushing back towards the IB. Now, we know we have this liquidity pool right here. We know we have it. Right, we have the same thing here. You just keep drawing, right? This is often what I'll do, but you'll get to the point where you can just see it from your mind. You can just see it, right? It's obviously the coloring. Now we're coming back into 2 areas of, well, certainly here we have this liquidity here on the effort to try and get in, right? So a couple of things could happen here. You might, just in terms of just deducing what's likely happening in the order flow. If you've got bulls here and you've got aggression here amongst buyers trying to get back in. Now here, if indeed they can tap into that and rally bulls here to get back towards VWAP, you would anticipate that this is an area where they could do it. The opposite happens, right? We can't, there's liquidity there, but we can't get back into the IB. Here's another fail. Here's another fail. Here's another fail. Now here is where the trade is. You're seeing this, right? So I'm not suggesting that we're going to get the tick swing. You're not going to get all of that. You want to wait until it's relatively clear so you know I have an advantage. So I'm trying to get in, trying to get in, trying to get in, trying to get in. All of a sudden, I start getting lower highs, right? You can see it. Right? It's not hard. Now, I know these are minute bars, but you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes here to let this develop. This would be the 10th minute. 10 minutes for you to evaluate here. What's happening down below? What's happening down here? Well, not big bursts of volume. The last burst of volume I have was right here. So again, if this was going to be bulls using this as we get right here, well, they did get a little push from it, right? Maybe they grabbed some of that. Now, is that, again, it's more than you realize. It's more than you realize, right? That's, what do we get right there? There's 18 ticks, right? But are you going to get that? Probably not, right? Probably not. Maybe if you're, well, let's assume that you didn't. You're kind of looking down here going, I don't know, right? So because you could really draw this whole thing like this and say, what are we doing here? What's the time of day, right? We're right in the noon hour where the market tends to, right? Europe closes, the market tends to slow down a little bit. Not always, that's not an absolute. It's just a tendency, right? I mean, most of the trading is all by computer anyway, but so it's not like, oh, 3 martini lunches are going on down here, and we'll come back after the day. That's not that's the way it is anymore, right? But so you can't count on a lack of volatility in the noon hour. It's just a tendency, right? Just like when Europe closes, there's a tendency for a trend change, right? It's a tendency. Where's the trade? Where's the trade? All right, let me get all of this off here. There's the trade. Right, so so we could draw this over here. So here's sell volume right here. All right, let's bring it over. Now we got some buy volume here. They cannot get back in. We know there's a pool of liquidity here, right? We would just, again, we ID it. Right, now we start to fall. Right, here's where I think what we're trying to teach you is here. As we retrace now, we're coming back into this pool of liquidity here. We've got some structure here that we're looking to break, right? Can I get a higher high here? Can I invalidate some of these lower highs by getting a higher high? Can't do it. What do I run into? The 20. All right, and down it goes. All right, so note here, we get a little separation here. We start to get a little separation here. Now here's the final type of bar type, and this is a churn bar. So we have very high volume, very high volume, very narrow spread. Right, it's just classic volume spread analysis. It's not complicated. We have all of this volume here, but the market's not going anywhere. Right, it's commonly referred to as a churn bar, high volume, narrow spread. Well, and you'll often find these will be found at pivots, right? Often significant pivots, highs and lows of the day. Well, here, is it the high or low of the day? Well, no, right? But I certainly have a significant moment in time as sellers run out of juice here. So let's do it this way. From this acceleration, now we're going sideways here, right? We get stuck in a box. Right, the box of this liquidity here. We come back to it, right? But there's no appetite for lower prices. Now, well, let's do it. Yeah, let's bring it down this way. Now, again, this gets a little funky. Oh shit! There we go. This gets a little funky in here because now we're getting into news, right, that nobody could have seen coming, right? It's just that, so this is not a great day again in terms of the size of the move that comes off of it. Well, here's a big bar, right? So this is, again, this should attract your attention. What's happening here, right? A big burst of buy volume comes in here, right? We got this big up bar. Where do they come back to? Right, these two liquidity pools that are right here. We had one here as well that was tapped here. Right now we're back, big up bar. Now if they're going to change the trend here and we're going to go, we're going back into the IB. That what they're doing here. This is, sorry to say it this way, but that's retail bait, right? Well, we're going to push up here with all this volume. Look at what comes off of it here. So at this moment in time, again, I think I remember this, right? Because I had alerts go off. Big burst of volume, right? So, because you can set alerts on this. So I get a huge spike of volume. So when you see that, it's almost always a head fake, right? They want to. Market's been down, right? We're still close enough to the IB here that maybe you could tease a push back into it. It's the big, when you see one of these, your first instinct shouldn't be, I got to long it. Your first instinct should be, I need to sell it. Now, that's not a, that would come with time and experience of having traded with this for some time. But now the reason I want those alerts to go off is not to alert me to buy, it's to alert me to sell. So you see it comes up here into this pool of liquidity where we've had these high volume bars. We come right to the pre-market mid. Now, would you have gotten that trade? Let's assume you didn't. Let's assume you didn't get that trade. Like, oh, I was turned away. It was 110. I was eating lunch. Whatever it may be. Where's the next trade, right? So here now I come back. Look where I am, right? I'm splitting them. They're right on top of each other. Now, do you know that's coming? Of course not, right? You don't know that's coming. But we're back into. Let's do it this way. This pool of liquidity. Right, we've come back into that. I know there's volume here, right? Look, I mean, what do we do here? I'm 6,000 contracts here in that 1 minute period. Now I'm coming back to it. So if I were to draw from this low to that high, right? So do you see the pieces start to come together here? So what I want you to see here, again, we don't even have the full suite in here. You could trade just off of this. Easily, right? You could easily trade off of this. Now add your fib retracements and the algo plays and the measured moves. You could trade just with this. And I wouldn't want to discourage you from doing that. In fact, this is often a good way if you're in a period where you're just having losing days or you're just unclear. This is a great way to come back to just basics, right? Put a 20 and a 50 on and some volume, right? And just trade the price action. The more things we put on it, the easier it is to lose track of just the simple stuff, right? The basic stuff. Swing, retrace. Now, you could make the case here. You absolutely could make the case. Well, hey, the moving averages are going sideways. That said, do we have a sense of trend? Do we have a sense of trend for the day? Do we have a sense of trend? Yeah, we do. Right? Would it make sense here to be making a hero play and say, okay, I can identify right here on that high volume as we've hit this low here that now at 1:20 in the afternoon, we are having a trend change. Right? And I'm going to be the hero. I'm going to post that on Twitter. People are going to see what a great trader I am. I nailed the turn. Now we're heading back to VWAP. Right? Is that the trade you want? To be long here? If anything, because they're going sideways, I would suggest to you, perhaps you sit out of that because you're not sure, right? All of a sudden, I've had this little change here where I got a higher high relative to this high, right? We want to stay very current. I've got a big upswing of volume. I mean, just the trend line would kind of alert you. Okay, so if that was, again, we're not trying to trade the breakout. If that's a legit break, right, and we're going to get a trend change, what you would anticipate is a retrace back into that pool of liquidity, and then we'd carry on that direction. At least get back to the IB high, right? Not only do we fall and break the low of that bar. Now, you might say, oh, okay, well, we're coming back to it, right? Okay. All right, well, here's another blue bar, 150% of the volume of the last 4 bars. They're trying to get back. Where do they get back to? And we just drew this, right? So here's the low of the bar. Right? I got just wicks up here. They're coming back into this liquidity here, or you might even say, oh man, are they still tapping this liquidity here from this one? I want to know that that's there because I know there was a pool of liquidity here. Now, maybe that liquidity here they're all stopped out here. Could be. Maybe not, right? We don't know who that is in there. But the fact that I can't even break above the 50. Perhaps, right? Perhaps, right? That's one. Now, once it goes, right? If you're not in that, well, you're not getting in that. Right? I don't care who you are, right? That once it starts, the danger of just jumping in here is very high, right? Again, I mean, just here. This is what I mean here. Look at that little pullback right there. That's 30 ticks, right? That's for the average trader. You're going to stop. Now, maybe you say, oh, okay, I took the break of the structure here. Yeah, I was on it. Maybe you did. Maybe you did. I didn't, right? I didn't know that was coming, right? It's always easy after the fact. But where would the trade be, right? So once we get this distance, again, look. The market is giving you the information, right? It's we that make it more difficult. We look at the separation from the 20, right? Eventually, we're going to work back towards the 20 and the 50. So what do we do here? Look, we do it in a nice, pretty 3. Nice little 3, right? Right to it. Well, I wasn't sure about that one, so I'll take the next retrace. What do I get here? Lower high. Now, is that a trade you can take? Is it worthwhile? Is the risk reward worthwhile here? Let's say you're not going to get. Let's say you take the break of the bar. It's 51 ticks. All right, let's assume you didn't get all of it, so maybe you only got 40 ticks. All right, you disappointed? All right, if you're a scalper, 40 ticks, that's a pretty nice little trade. Now, now this is where it gets a little more interesting. Let me open this up again here. God, it's going to be a very long video. I might have to make it into 2 parts. Okay, so let's do it this way. Okay, so here I get a big burst of volume. Okay, so here's the bar, right? So here, oh, wait a second. Oh, I'm on the other side of the 50. Right? Maybe something's happening here. Now, I put in this low here. We can see after the big swing. Oh, you know, just visually, right? The big swing. Right now, the swings are getting smaller. Now, all of a sudden, wait, you know, higher highs, higher lows. Maybe something else is happening here. Maybe. We get this big swing here. Is this, if, let's see, where are we towards the end of the day? All right, if this was going to be a legit, okay, hey, we've broken the 50. Well, perhaps, right, you might look at that and say, okay, well, I know there's a pool of liquidity here, so if they're going to go up and then come back down, here we tap that liquidity. Now I'm at the 50 from the other side. Obviously, they haven't flipped. But if this is going to go, maybe that's a trade I can take right there. Swing, retrace, I'm tapping the liquidity, right? Maybe all the buy orders didn't get filled there, and off they go. We're going back towards, you know, to finish the day up towards the IB, towards VWAP. Who knows, right? You don't know, right? Nobody knows at any moment in time. So all we can do is just say, okay, what's right in front of me? Well, I mean, the obvious thing is the 20 and the 50, right? They haven't flipped. Right, so we know the momentum is down. So when I get right here and I'm looking for a big swing here, because if this is the tap of that liquidity and buyers are going to take it up, I would anticipate there'd be some buy volume there. I get quite the opposite. We get quite the opposite here. That's just free falling on volume. And then even the little retrace, right? If you were unsure, right, they can't get a new high here. I know, it's annoyingly frustrating in hindsight, right? They can't, here's the pool of liquidity. They can't get to a new high. They can't even get this high. So could you have traded that? Well, where would your stop be? Well, this would be a reasonable spot for a stop, maybe a tick beyond that. Would you get that one? Maybe not. But how about this one? Now here, if you through this, it's consolidation, right? Volume drops off, right? So we know that was a false break. Well, okay, so you weren't sure because we had this big volume. Now we come down here, so you might say to yourself, oh, well, okay, I see what happened here. We just came down and tapped the lows, and now we're going to go again. Now here's the burst of volume. All right, we're heading back towards VWAP. I mean, I was trading that. I remember thinking, okay, maybe this is our push towards VWAP. Let me do it this way. Right, here's all that all that liquidity here. Let's pull it over. There's the liquidity. We know it's here. I can't miss it. Color the bar, color that. Right? We're back to it. Is there a pool of liquidity here? Well, you can make the same case here. It's not the highest bar in the last 4 bars, but it's relatively higher liquidity here. But this is the one I'm really want my eye drawn to. So what is the pattern of the market? What do? We swing, we retrace. Now, are we going to get a higher high or a lower low? Right? That's the only question that we're ever dealing with throughout the course of the day. What are we going to get next? Well, pardon me. It could be double bottom, right? Maybe we'll get a double bottom. But swing, retrace, are we going to go towards the low or towards the high? That's it. That's all the market ever does. That's the only decision we're trying to make. Towards the low or towards the high. Well, again, if you had to, give someone the advantage here, given the trend of the day, given where the moving averages are, given that we've just done a retrace here and we've got wick rejection here, are you taking that trade? Maybe not. How about that trade? Lower high. Lower low. Oh, man, you missed that one. How about that trade? It's I know, that's where I started. It's annoyingly simple in hindsight. Annoyingly so. Come on, man. Is it that easy? Well, what makes it hard, right? Again, I say this is the problem with this level of volatility. Look at the size of that kickback. That's 46 ticks. All right, so if you entered here, are you going to have a 47 tick stop? Maybe not. Right? I'm assuming anyone watching here, that's probably a bigger stop than you're going to have, unless we're talking micros, right? Which is, again, why this volatility has been a great advert for the micros, right? So it's just extremely high volatility. So the impact of a losing trade, if you're trading the market and not just a set dollar amount, is dramatic. And it's annoyingly deceptive to the eye, because that looks like, oh, that little kickback there, oh, maybe $1.25, maybe 150, something like that. close to 50 ticks. So the entries really have to be precise, right? If you're going to stay on the full size, and typically our traders will have accounts from 10K to 100K and above. But in this range here, for this level of volatility, I would think you want to be particularly careful about and be very selective about entry, right? And then it needs to happen relatively quickly. So I'm going to break the video here because now I'm going to put the whole package together, so I don't have a 2-hour video here. But I wanted this to be a little bit of a training as well as an introduction to the new components. Okay, so at this moment in time, all we've really talked about is having a 20 and a 50 and how that can simplify your trade, and then adding some volume interpretation, right? So this is kind of a hybrid between volume spread analysis and some techniques that were pioneered in the FX market, since they don't get actual volume. They just get tick volume because they're not centralized, they're decentralized. So much of the volume pioneering that's gone on in the marketplace over the last 20 years has really come from the FX market, because they have to deal with the fact that they don't get centralized volume, right? So they've had to be creative about how they interpret what's happening with regards to volume, right? So FX traders can teach us a lot. So that's really much of what this is, a bit of a hybrid and coming from those sources. So with that, let me pause here. We'll go into part 2. We'll put the whole package together. We'll include, now we'll show it with all the tools of the graphical order flow, the TDI, and then some of the volume components that we're talking about here. Okay, so let's break it up, and we'll start in the next video.